Today, U.S. stock markets experienced a notable rebound, signaling a return of investor confidence after what had been the most challenging week of the year. Notably, the S&P 500 surged over 1%, moving back above the 5,000 level, a significant milestone. It had fallen below last Friday for the first time since February. Similarly, the Dow Jones Industrial Average increased by approximately 1%, adding around 400 points, while the tech-centric Nasdaq Composite advanced by 1.4%. This resurgence was led by substantial gains in shares of Nvidia, which alone saw an uptick of more than 4%. The recovery in tech stocks is particularly significant as it follows a period of underperformance that began with disappointing earnings from Netflix. These lackluster results had exerted downward pressure on the broader tech sector, exacerbating the market's vulnerability to existing geopolitical tensions. The optimism about potential interest rate cuts has waned, fueling skepticism among investors about whether the heavyweight tech companies can continue to propel the market forward. This week, however, all eyes are on big tech with several key earnings reports on the horizon. Major players like Meta, Microsoft, and Alphabet are slated to release their quarterly results. The market is poised on a knife edge, with investors hoping these companies will deliver strong performances to dispel the recent gloom and rekindle growth sentiments. Amid these broader market dynamics, Tesla has captured particular attention. The electric vehicle manufacturer announced significant price cuts across several markets, including the U.S. and China, ahead of its quarterly earnings report due Tuesday after the market close. This move has sparked a mix of reactions, with some investors concerned about its implications for profit margins while others see it as a strategy to boost market share. Adding to the investor drama, Tesla is also navigating internal challenges, including renewed scrutiny over CEO Elon Musk's compensation package and the company's ambitious robotaxi initiative. Furthermore, the financial markets are closely watching the Federal Reserve's next moves. Last week, Fed Chair Jerome Powell and other policymakers hinted at a more hawkish approach in response to persistent inflation, dampening any remaining hopes for imminent interest rate cuts. This shift in tone has set the stage for the release of the upcoming Personal Consumption Expenditures (PCE) index this Friday. As the Fed's preferred gauge of inflation, the PCE index's readings will be critical for assessing the economic landscape and determining whether interest rates will need to remain elevated to manage inflation effectively. In summary, today's market performance reflects a complex interplay of optimism driven by potential tech earnings and caution due to macroeconomic uncertainties. Investors are balancing their hopes for a tech-led market rally against the backdrop of an evolving economic policy environment, marked by tight monetary stances and inflationary pressures. The days ahead promise to be critical as market participants decipher earnings reports and economic data to chart their next steps in an increasingly unpredictable financial landscape.